Hi and welcome to this analysis of the N Retailer T4 case study. My name is Nick Best, and for anyone that doesn't know me, I've spent probably the last 7 years of my life almost completely focusing on this exam. Bit of a top CIMA, sort of sad top CIMA expert, you might call me, really. I've seen over 40 different sittings. I've wrote the learning system alongside the examiner, so I know that the examiner's perspective on this exam. I've helped literally thousands and thousands of students through this particular paper. I've taught this paper at BPP and at Reed Business School and at Kaplan and at First Intuition, as well as running the Astranti courses, of course, which is my primary focus now. And so I've kind of been there and done that on top CIMA. And I sort of say that to you because what I want to do is share with you that experience in this series of videos. This series of videos is going to cover a range of different elements. What I want to do is pick out for you key points in this case study, key things that I think are things you really need to be aware of, key points that are going to affect this business's strategy, key points that are going to link through to possible issues we'll see in the exam day, key points just on my experience of what you should be pulling out, and really what's largely irrelevant that probably won't be something that's going to be something to focus on in the exam. Of course, it's hard. You come at this for the first time. It's hard for you to know what the key points are. If you go on a course, you'll get that pulled out for you by a tutor. And I just want to really give to you in this series really what would be covered in the whole first day of a course if you went on a teaching course, where typically on that first day there's a deep analysis of this Preseen, lots of debate and discussion. I really want that to be what this is for you listening to this through. So things I am going to cover as we go through are the key business models. So we'll be having a look at things like strengths and weaknesses, opportunities and threats in the SWOT, pest analysis issues, Ansof's matrix issues, generic strategies issues, and which we see pretty much straight away actually on the first few paragraphs as we start going through. And I'm also what I want to do is tell you a little bit about those models as well. So start to introduce the models and how often they get used in the exam. Some of them are used more often than not. For instance, we take something like Porter's value chain, which is something that's been very, very common throughout your studies to this point. It doesn't tend to get examined or used or even mentioned in the T4 case study, and yet something else like Mendelow's matrix absolutely does. It's almost always in that. I'll tell you why, and we'll talk about how we might apply those models as we go through. What I also want to do is focus on the unseen issues. As we go through the Preseen, most of the issues that could possibly come out are hinted at as part of this Preseen. What we want to do is have a think about what are those possible unseen issues, and therefore you can go away and start thinking about those and start preparing yourself for those. I'm also going to give you various different exam hints and tips. Just basically as they occur to me as we go through this, I'll just throw in some comments and thoughts for you, just in terms of the way you approach the exam and deal with the exam. That's kind of ad hoc as we go through, but I just want to be giving you as much value in this series of the videos as you possibly can. Now, this particular video is part of a whole series of videos where I will be going through section by section through this particular case. You may be listening to this one as the sort of single free one that's available on the website or on YouTube. If that's the case, what I'm hoping to do is give you as much value as possible in this first one, but also hope that you go on and purchase the remaining ones that you can purchase on the Astranti.com website, and hopefully get the value through all of the rest of those. Basically, I'll be going through all of the case study, doing some financial analysis on the numbers at the end. Right at the end, we'll do a detailed strategic analysis, and in that analysis, I'll be talking you through all of the key business models. I should say, if you're on a budget and you're just looking for free material, you can get that strategic analysis just in paper-based form, free by signing up on the website, so please do sign up for that. But I should be talking that through with you as the final video. So we're going to do a full detailed analysis of this case study, giving you hints and tips, and also hopefully getting you focused on the exam and what you need to pull out of this for the exam. Okay, what would I say overall about this case study then? I would say that it's a useful, interesting case study. We have got a retailing firm, probably along the lines of a department store, along the lines of Marks and Spencer's. Seems to possibly who it might be based on, certainly elements of it, but or a John Lewis or a House of Fraser would be famous UK-based brands. And that's interesting and easy to find industry examples on. Goodness me, a damn sight easier than vehicle maintenance, which was our previous case, which I suppose you might have sat that if you're sort of resitting this paper, probably mightily relieved to see this is on a nice standard easy industry where we can find some really good industry examples relatively straightforwardly. Okay. One thing I will say about this is I am going to assume this is your first read through the case as if you were on a course. So what I do on the teaching courses I do is I work through a whole day of analysis and we go through section by section by section by section. And my assumption is always you haven't read the case. And that's the way I'm going to be doing this now. So I'm going to be saying, right, we'll read a certain section and then come back and I'll assume that you haven't read on further and I'll assume I haven't read any further either. So we'll be talking about, well, maybe later on we'll be looking for this or that rather than trying to do the whole thing all in one go. It can start to get a bit much there. So I'll be assuming we'll read through a paragraph and say, well, these are things to look for. We may even end up going back on those things as we come later on and we find new information out. Okay, so just watch out for that. That's the way I'm going to do this. So with that in mind then, what I'd like you to do at this point is read the first two paragraphs of this case study. Little read through, pull out any points that you might have. That's, I don't mean paragraphs, I mean sections. So we've got N company history, gives us some background to the company and its past history. I will warn you on that one actually. Let's put this in here. This is the past of the company. Now, that's not necessarily reflective of where they are now. My experience of these sections, which they're always in every case study, is actually there's quite a lot of useful information. They don't tend to tell you a whole load of stuff about stuff in the past that's now not relevant anymore. It normally is relevant stuff. But just bear in mind, if it's telling you about stuff about the 90s, which I can immediately see just here, well, that was, 20 years ago, okay? So just watch out, that is the past. And then the overview of N is giving you some details about the company, some stuff about their management information, some stuff about their position in relation to distribution centres, the way they get their information, a little bit of stuff about the board in here. In this particular section, I won't be going through Appendix 2, which is the finance section. We'll go through that later on. And I won't be going through the organisation chart. Again, we'll do that one later on. So just read those first two paragraphs, make any notes that you want, put this on pause just for a few seconds, and then come back to me and I'll give you my views on these two sections. Okay, read it through? Hope so. Okay, so let me give you my views on these two. Now, this first section here, the N company history, I see this as being almost in two sections. The first section, and it's kind of intermingled, but there's kind of two things in here, is that obviously we've got a business here that's got past strengths, some really good things in the past. If I can spell that properly, there you go. We've got some good strengths, the brand and locations and stores, and where it was 20 years ago was a real strength of this business. But then we've got some changes leading through to weaknesses. And so this section starts off with lots of stuff about the business and where it was and how successful it had been, but starts to hint at some of the problems that as we're going to go through, we find out that some of the weaknesses that are still there effectively as we go through looking at this business. So let's start then by pulling out as a starting point some of the key strengths in this particular case study. Okay, so just starting off here in the first line, we've got household name. So this business was a household name during the 1950s as a department store. We could sort of add in here then, so let's put in here, well-known brand. So we've got to ask ourselves the question is that just because it's well known and everyone's aware of it, does it stand for the right things? And we're going to have to find out a little bit about that as we go. But everyone knows about it. It might be a company a little bit like Marks and Spencer's in the UK, which is this kind of much loved UK company that even if people don't shop there, they still know of it. It's always on the news as this kind of institution in the British culture. So, you know, there's definitely an advantage to that knowledge of the brand. So that's a good strength to start off with. Okay. They had, and remember this is looking over the past, outlets in every large town and city in country Z. Now, that's going to mean we don't know exactly where those are, but they have got the strength in terms of locations in all those main locations. Now, it might be that some of those are in places that aren't so useful anymore. Some of them are probably in very strong locations in that country Z, and we'll need to take a view on that as we go through looking at the case. But probably here, strength in terms of positioning in terms of that particular country. Okay. Now, this is something I really want to pull out for you, because this is going to be something that's really crucial for us. This whole section and this third paragraph here is talking about Porter's generic strategies. And do you remember Porter's generic strategies? These are the strategies of cost leadership, differentiation, and focus. And what Porter said is that every company needs to avoid being stuck in the middle and should therefore have a key focused strategy. And the first decision is, are we a cost leader or a differentiator? And we know in this case, this business is differentiating on quality and on service. Now, why is that crucial to us? Because in the exam, on the day of the exam in the unseen, if an issue is thrown up on that exam, that means it might be bringing down the level of quality or reducing the level of service, we can then conclude, no, we shouldn't be doing it because this is our source of differentiation. This is what's making us special. And so it's vital that you lead everything back to that. Why else is it really important? Because there is a mark, in fact 2 marks in the exam for openly discussing and using the generic strategies model. There's a technical mark for starting off in about maybe 3 to 4 lines explaining the theory according to Michael Porter's theory of generic strategies. There are a range of you explain the model. Then you say, in this case, N retailer are differentiating on quality and service, from which you then say we can apply that to this issue because quality is going to go down if we follow this new approach, or whatever the issue might be. And so you will get an application mark for applying it, you'll get a technical mark for knowing the model and using it appropriately, and you'll expand on your knowledge of that issue in the exam in order to get more marks. You are, in one paragraph, you're actually getting 3 marks that someone could have said exactly the same without generic strategies, and they would have just got 1 mark. And so these are the kind of little hints and tips I want to be giving you as we go through these videos in terms of how you go about pulling these points into the exam. Okay, so we're not finished, of course, because that's the cost leadership differentiation element. Second element of generic strategies is the focus. Do we have a wide focus selling to everyone, or a more of a niche focused on a particular target market? Well, of course, it's telling us here that, well, at least originally, okay, because this is in the past, its target market was middle income customers who were prepared to pay a premium price for the quality and the service. So we have, therefore, a generic strategy of differentiation on quality and service and focus on these middle income. And so the question then is, are they still following that? Because it's told us that that's in the past. We'll have to have a look as we go through. If they're not following that, they got stuck in the middle maybe somewhere, and they're not focused on a particular group anymore or not doing something, then maybe they are still focused on that, and we need to continue to get more niched, whatever. So, but that's really, really critical to our analysis at generic strategies. Okay. They started to, in the next paragraph here then, expand operation into countries across the world. So international company, start off in country Z, started to expand, and this helped them become one of the most profitable retailers in the country in the late 1990s. And so therefore we can say that in the past there was a very successful business. Okay, we kind of find that maybe they're not there anymore, but it gives them the bases and the knowledge and the brand and the recognition that can create an underlying sort of strength and culture to this particular business. And talking about the culture, coming up here in the first line, we've got good employment conditions for staff, which has got to be a good thing in terms of staff retention and attracting new staff. First to develop a returns policy, so in the past we're quite innovative. And so this is my first section here, this section of past strengths. In the past, lots of good elements to this business. Okay, so what does that mean going forward into the future? The second section in this paragraph is a range of different weaknesses that they might now have. So let's have a look at those. Okay, so I'm going to do these ones in pink just to distinguish between the yellow and the that we've got there. In fact, I think I might, there we go, use that colour there. Okay, so we go into the section down below. Then, as it moved into the 21st century, it became clear that its once market dominance was over. Now, why is that then? So, most notably, the growth of online retailing, which responded to too slowly compared to its more dynamic competitors. So that's definitely, they're going to therefore be a little W in there for a weakness. Are they not responding to technical changes anymore? Is it not just this online? Is it other parts of the business as well? So let's put slow to respond. Of course, you've got to remember this is 10 years ago. Maybe things have changed since there. Okay. Next then we've got more dynamic competitors. So that, of course, is a threat to this business. And so in the SWOT analysis, we put that one in there as a threat, is that, okay, we don't really want that colouring, do we? Here we go. Okay, so we want that one in there as a threat to this business so that we basically need to start responding to those competitors. They've shown that we were very successful. Not responding to that has basically taken this business down, and we find out how far in the next section. So in this next section then, it clearly states then that profits fell significantly. And there it is, just there. Okay, now this is very, very similar to what happened to Marks and Spencer's. So let's just talk about this as a bit of an industry example to get ourselves going on the industry examples front. You've got to remember in the exam, you need to include 5 industry examples as part of your analysis. You'll typically try and include the first one in your introduction. The examiner, as I said, there is 1 mark going for a good industry example related to the unseen in the introduction. And you can normally pre-learn some kind of statistical figure about the industry, which can go in there, 1 easy mark. Okay, but let's start to have a look at what happened to M&S. In 1998 in the UK, they had profits of £1.1 billion. They were this huge retailer throughout the UK and overseas. They were extremely profitable. They were much loved. People would shop in them as a matter of course. It was the major British retailer. Then suddenly they lost focus on their customers. The new competitors came in, companies like Next and Gap were growing at this kind of stage with new styles of clothing, with new types of products, and within 1 year, by 1999, their profits had fallen to 0.65 billion. And they never really recovered. Profits have stayed around that sort of level. And just out of interest, by 2012, their profits were 0.49 billion. That's profits after tax. And so we've seen that this business is really half the size of what it was, and it never quite got back to those its previous glory, as it were. So Why was that? Not following customer needs, old tired range. The brand got associated with perhaps older people rather than more younger generation who would buy clothing, which was a big element of their business, in large quantities. And so that was the story of M&S. And certainly this appears to be a very similar story in this particular case. So how did they respond to this then? Well, they responded through management changes, cost-cutting measures, store closures, sale and leaseback of stores. If you've not come across sale and leaseback of stores, this is a way of raising money. You sell your store to a finance company. They will then give you the money for that, and so you get an upfront amount of cash, which then you lease it back. So therefore you're paying out for that store in the long term. Now that, of course, is a good way of raising finance. That could be an option for raising finance for you in the future if they've still owned some of their own stores. Obviously, we'll have to have a look at some of the financial information later on, see what the position is just there. Okay. The position was stabilised, but revenues and profits were considerably below where they had been at their peak. So very much like the M&S story. And 2005 to 2012 attempted to keep pace by introducing an online channel and bringing in new designers, but it always seemed to be behind its major competitors. And so we're confirming then this weakness that we thought of before, which was that they are slow to respond and behind competitors. Okay. And therefore, this is something we must be trying to overcome as we go through, trying to think of what strategy we're going to be using for this business. Okay, couple of other just general points then in this section, before we finish this section off. I think that we just need to, very importantly, be aware now of the changes in relation to the venture capital company. And so I think let's just bring in here. So 2004 then, this venture capitalist, 4J, came in, and together with institutional investors, they bought 80% of the shares and the management bought the rest. Okay, so the directors bought the rest. Normally what you'd say is that by having directors purchasing, we should have motivated directors who are motivated to build the business, grow the business. It doesn't particularly seem to have done the business doing that well. Perhaps because they were existing directors, they were a little sort of old and staid and so on. We'll have to sort of see what information we have on directors as we go forward. But crucially then, a venture capitalist being involved brings up some key points. Venture capitalists are always looking for exit routes to get out of this business. And in fact, for Jay, certainly, normally they'd want to have an exit route within about 5 years. Certainly from information we've got then, they haven't exited as of yet. And so that's definitely a possible unseen issue, is they want to get out of this business in the short term. It's about the kind of timescale. Where are we now? 9 years. They almost certainly definitely want to getting out at this stage. So that could definitely be an unseen issue in the pre-seen. So what are we going to do? We're going to list back, and the unseen. Are we going to list back on the market? Are we going to raise external finance, find new investors or a new company to come in and put some cash in? Where's that money going to come from? Could be very, very important. But also watch, we had a venture capitalist firm in our previous case, the BVS case, and it's also about a key stakeholder in Mendelow's matrix. They become very important, a stakeholder who we need to ensure we are keeping happy. They're going to actually be a key player here. We want to discuss with them regularly, have them involved in decisions, make sure that they're happy with decisions that are being made. Perhaps they'll give us some more money in the future, could be as well. So a really crucial stakeholder who, in the exam, what you can do therefore is you can put them in as a key player in Mendelow's matrix, and you can refer to that. Normally I do Mendelow's matrix as your second appendix in the exam. I would say of scripts I see, 80 to 90% of people will include that as an appendix B. But then you refer to it, and a key mistake I often find with people referring to these appendices is that they just say, and they're a key player in Mendelow's matrix. But what does that mean? That means that we must therefore keep them close, work closely with them. It means that if we're making a key decision, we must get authorization from them, probably get authorization from them first. And so therefore do use that. And when you do cross-reference your appendices, really critical that you show how you're using that model. The examiners have got very, very frustrated with people simply putting an appendix in and then never using that appendix. And I think your appendix has got a danger of not getting any marks if you don't refer to it and use it properly. Good. One other point I just wanted to raise in this section, there's a lot in this first section actually, is this section up here about their different products. It's a wide range of products. Designer fashion, clothing, furnishings, hardware, electronic products, computers. In one sense, this is where we move away from the M&S style model. M&S back in the 90s were more food and clothing and not so much of all these other products. What they've actually done is they've moved into those products over the last 15 years. So sort of slightly moving away from that. This is more of a kind of Debenhams and House of Fraser kind of company in here. But the reason I wanted to pick this out is that this is going to be a critical success factor of the business, which is having the right products. What I'd be very interested in is what are the margins on these products? How much do they return per meter squared of space within that area? Have we got the right balance? Are we bringing in new products? There's branding issues in there. So it's things like ranges. What are the brands that are selling? Are those brands consistent with our generic strategies of high quality, premium pricing, the profitability of those, the margins? And so those are going to be some information that I want later on, or potentially could be the information you get given on the day of the exam, whereby you're given the margins, or you're asked to make a decision about moving towards certain areas or away from other areas. Okay. Overriding feeling then on this paragraph is good historic company, traditional, good brand. On the downside, getting behind, slow to react. If I was actually thinking of unseen issues then from this first section, pop this up here, then I'd be looking at ways to react more quickly. So perhaps it's some kind of, well, Marks and Spencer's had a customer insight unit that they introduced to try and understand customer needs better. So perhaps it's some idea like that as a way to react more quickly or come up with new ideas or be more innovative in some way. Okay, I could see the directors coming up with these kind of ideas. Then we've got issues over competitive threat. So some new competitor is going to do something and we need to respond to that. We've got issues over the venture capitalists, particularly with regard to, I could see there being an issue over exit routes, but also just anything to do with financing and funding and their views on it could be in there as well. We've got possible issues on product ranges. Okay, there are other ones in there too that could come up, but that gives us a good starting point for which to analyse the rest of this case. Let's have a look at the second paragraph then. Okay, so overview of N, and a much quicker paragraph or section for us to go through this particular one, because what we're doing is we've got a certain number of areas that are being picked up on, and I just want to go through just some high level points to pull out from these areas. I think the place I'm going to start then is all of this section on information systems that starts here on management information, comes down sort of here, and even goes over the page. And one thing that this does seem to be hinting at is that there seems to be a weakness, which is a lack of integration of their systems. As you will know from your studies at strategic level, many businesses nowadays move towards these enterprise resource planning systems, these fully integrated systems that integrate stock and distribution through to, in the case of a retailer, to their electronic point of sale system, through to their underlying management information system. And it does say here that the stock is controlled through a separate system. So You know, we've got the separate systems in there. We've got here the idea of variety of information systems. One possible unseen issue, therefore, could be kind of a new information system, e.g. enterprise resource planning system, an ERPS system. So do learn your advantages and disadvantages of ERPS, because that could certainly come in here. One thing I will say on the positive side, if we just come down to the next paragraph, is that they are getting some good information in here on the stores and things like sales per store and sales per product category, indication of gross profit by category per store. So they are pulling this together. Perhaps they're getting that in a more inefficient way than they might be able to. Perhaps that might delay the information. That's going to be a good one. Look out for the information in the unseen on the day. It will, if this is going to be an issue, it will expand on it. It will tell you some more of the problems they're having with their systems and with the information and the inefficiencies in there. Look out for that and then decide whether or not you think that the new suggestion that they have is a good thing or not. Hard to know going back up here into this first section. This is all about distribution centres. They've got these 6 regional distribution centres and an administration centre, 2,000 staff. We're talking primarily about country Z here. And it's very hard to know, is this a strength or weakness? Just put strength question mark, weakness question mark. It's a fact that they've got it. That's probably a good thing. There's an asset there, but we don't know how good it is at dealing with efficiencies and how good it is at distributing the products. Absolutely a critical success factor in a business like this is going to be having your stock on shelves. Back in 2005, Sainsbury's, they had a disastrous change of distribution centre. Accenture came in and were trying to create this completely automated distribution centres. The project failed, and they had these what were set up to be automated distribution centres that were actually being run manually. So they were doing manual picking of things set up for machines. It ended up with stock, sort of shelves being sort of empty of certain items of stock for quite long periods of time. This brought down their reputation. It meant they weren't able to make the sales. Any kind of retailer like this, absolutely crucial they've got distribution right. We don't know whether they're good or bad, but we do know is this is very, very important to them. Okay, so that's important. We'll have a look at the organisational chart when we get to that section a little bit later on. Okay, coming down some other points here. Really critical point down here at the bottom, and this is the fact that they have got this new CEO. Okay, Ms. Builder, and she has a reputation for someone well known as a record for turning companies around, and so I think that I would probably put that in here as a strength. Perhaps it's taken them a while to get to this point. But a new CEO with some new ideas. This is a tired business, and therefore we do need someone to come in and make some changes. Of course, this also gives the opportunity for the examiners to come up with all manner of new ideas. This builder is want to do this or do this, new products, new online things, new distribution centres. You know, they can basically do anything they want. So it opens up for a whole range of new unseen issues. But in terms of analysing the business, I think a strength they've recognised as a problem. They've brought someone new in. That's going to hopefully take the business forward into the future. The next thing to notice is that the majority of goods sold are called own bought goods. So up here, 80% are own bought. Now, own bought means that those could be either, let's just put a note in, branded or non-branded goods. It's worth noticing that quite a lot of this terminology, there is later on in the case study a glossary of terms. So if ever you find any terms as you're going through you're not sure about, then that's the place to go. Go and have a look in there. So that means branded or non-branded goods, as opposed to 20%, which are concessions. Now, concession is like a little store within a store. Let's put that note in just here. Where another company will sell their products in a little section which will be their branded section. They sell their products. Either they simply rent the space within that area, or there will be a percentage of commission of the value of business generated down here. So is that a good or a bad strategy? It's interesting because companies such as Debenhams over the last few years have been moving more towards an own bought strategy rather than a concessionary strategy, to mixed reviews. Some elements of that say it's good, other elements say it's not so good. That's something for you to go away and do your own research on. But certainly that could be an unseen issue. So it could certainly be unseen issue is, should we move to more or less own bought products? Okay, so something for you to think about and look into. It's probably also worth making sure that you've thought about who the typical concessionaries are. What's important is that if N Retail are going for a high quality, high service approach, that the concessionaries that they have in their stores are consistent with that. You don't want to have lots of low quality, high value, very good value, low price, because if that's not consistent with the rest of the store, unless they're going to move more to a cost leadership approach. So this could certainly be an unseen issue here over concessions and the number, and having the right type of concessions within a store. What you wouldn't want to do is have anything inconsistent with the overall branding of the group. This little section up here is talking mostly about finance, and we'll have a look at Appendix 2 in one of the later analysis when we do all of our financial analysis. Lots of numbers for us to look through, so we'll go through those in detail when we get to that point. So that brings us to the end of this first video. In the next video, what we're going to do is, you'll notice the title here is Developing the Industry Contacts. This is very much a focus on pest analysis and 5 forces analysis, and we'll really do a lot of work in those on those particular models in that particular area. And actually, at the end of that video, what we'll be doing is actually looking through our pest and 5 forces and thinking about how those affect the exam and the unseen and so on. For those of you who have bought the videos and are kind of coming back to listen to that, I look forward to seeing you there. For those that aren't, let me just leave you with a couple of key thoughts. If you're going to be doing this yourself, going through the rest of this scenario, then go through it in the way that I've done. Think about each of the models as you go, put the notes down, look at the strengths, the weaknesses, think about Ansop's matrix, think about the stakeholder matrix, and so on. Create for yourself a blank strategic analysis and go through putting all of the elements from this onto that strategic analysis. Then download my free one and compare it with yours so that you can get my view and your view, and that way you can have a reasonable bash at doing this by yourself. So do that. Do you remember we also sell mock exams? I mean, what I would say in terms of how you go about passing this exam, probably the biggest thing that I see that's different between those people that pass and fail this exam is those people that have taken the most mock exams tend to be those people that pass. And don't just do the mock exams, do them to time. Don't just spend 6 hours doing them, because time management is probably the biggest barrier to people passing this exam. A whole completed report is absolutely critical, and therefore you must be practicing in 3 hours 20 minutes every single mock you do. Get a standard report structure and stick to that report structure all the way through. And when you do your mocks, do get feedback on those mocks as well. So each one you're improving. Don't just expect to do one and then the next one just be better and the next one better. It won't be unless you've been told specifically where your errors and problems are. So do get some good feedback on those mock exams. Actually, any good course you go on, you should be getting good feedback on that. You can also get that from us sort of individually if you're not going on a on a specific course. So that's what I would say was critical, and I wish you the best of luck to those of you going forward doing your own studies on this. Those people coming back for the for video 2, I will see you in video 2 very shortly.